What's going on, believers? I got a live price commentary coming for you today. There is high impact news about to hit the market in about 20 minutes. So just take a quick read over this disclaimer here. Pull up the economic calendar. Let's look at that news report that I'm talking about. Just gonna give it a little quick refresh first, see the time. So about 20 minutes or so. Again, I don't really pay too much attention to what it actually says. So if anybody else has expertise in this field and truly know how to utilize the data to some sort of advantage outside of just bringing volatility to the marketplace, I'm all ears to anything that may help me in my development. But then also later on, 11:30, we have a FOMC member speaking. Now, what I'm thinking really right now, though, before I even head to the charts, is tomorrow starts a new month. And so I guess I'll look at the daily real quick as well when I go through the charts from the monthly perspective, see how May has traded as far as the whole month is concerned on the daily. And we see coming up Friday NFP, and then next week, I guess a relatively quiet week for the US dollar. I think it's the week after that where it gets crazy. Yeah, CPI, PPI, another interest rate decision. So in 2 weeks, things could get a little bit crazy. I guess I'm not really expecting too much today. That's why it's a little bit of a later start. But let's get to the charts real quick. So this is the S&P on the 15-minute, the New York session model setup. Got some volatility with the 8:30 open, kind of trading into the midpoint of this range here, the yellow shaded range. But looking at the dollar real quick. So as far as the week is concerned, it's continuing to just trade sideways. In my opinion, what I'm seeing, right, is that this gap from the opening is just constantly returning to it and expanding the range that is created. So it started off with a small range and then expanded to a larger range and then expanded again to an even larger range. So this is actually what I wanted to see last week from the dollar was a consolidation ultimately, which would allow for the indices to trade higher, but S&P and Nasdaq did without this. And actually, just to go and show that really quick, just want to look at it like I said from the daily, right, and look at the whole month of May. So May started here, and so for the E-mini S&P so far for May, I'll get rid of this, but this is still valid. So the E-mini S&P traded lower, start the month, returned back into that range, consolidated, made a new high, back down to the same level as and then acted as support, sent us to a new high. Still hasn't taken out that high from here yet, which I'm really interested in seeing if it can get up there, if it wants to turn around energetically. Not to say that this wasn't already the beginning of something potentially, but there's this inefficiency here that is traded into now. And then could easily, right, send it up there. And also from the weekly, there's an actual liquidity void that it may want to reach up into. And so that's the S&P. And the reason why I'm focused on this one, you'll see quickly here. So this is NASDAQ here and showing how it's been trading since the beginning of May. So the beginning of May right here. So it had that lower for the first 4 days. Did not even take out any swing lows. This is the closest swing low here on a daily. Could not get down to that swing low. There's this inefficiency here. Ultimately, that they traded into. It found support there and rallied. These were some old highs that I was looking forward to get to. It overachieved, got to and through, found support, launched off, lower and efficiency here, one more time higher. And so it's not in no man's land, but it's definitely been the leader as far as trading higher. And this is exactly why when you see Dow Jones, why I've been focused on E-mini S&P. So since beginning of May for Dow Jones, that trade, right, the delivery lower took out a daily swing low back into about midpoint of that range, lower without taking out this low, but did get below the bodies of the candles, higher without taking out this high, and then lower sweeping all of these lows, and then another candle of a rally, but then open with a gap and just continuation lower. So they're actually all three, as far as the daily is concerned, technically trading the same way, but Nasdaq still not showing any clear signs of weakness to me. Dow Jones not showing any signs of strength to me. And so I'll just stick with S&P and play the intraday levels. And like I said, with it being a new month starting here, actually, well, technically the new month on the daily chart will start at 5 p.m. later today, Central Time. And so on the daily chart, how this candlestick says Wednesday, May 31st, once the session closes for today at 4 p.m. Central, and then it reopens at 5 p.m. Central, that new candle on the daily chart is going to say Thursday, June 1st. And so that will be the beginning of a new month of price delivery. And then taking it one step further, I'm just going to box up the range of April, which I had already on another layout, but I'll just do it again here just for completeness sake. And so this is the range from April right here, from high to low. And so just dragging that out and seeing that initially, right, traded higher, then lower, consolidate in the middle, push the high again, back into the middle, and then back out and above. And so that's E-mini S&P. So ultimately, still on a daily chart in the consolidation. So I'm not really too quick to make any assumptions about it trending higher, it trending lower. That's why I have to use the dollar chart here for confluence. And you see here on the monthly chart, this was the beginning of May. So it also, right, had price delivered lower to start the month. It did not take out a daily swing low though. Left relatively equal lows down here. A little bit of consolidation. Finally pushed out of that range. Inefficiency here. So acted as support and sent price higher, breaking through higher time frame levels and ranges that could have acted as resistance, and they did, like as speed bumps ultimately, like this one here. Little speed bump, found support again, broke through it. This here, little, I guess it wasn't really a speed bump because price got right through it, but now price is just working at that range right now for this week as it consolidates and just continues to expand the range that it's created for this week. And so that's just my observations right now. Nothing really hardcore as far as like a bias. That's exactly why I really like my New York session model, because it doesn't demand that I have a hardcore bias. It's just about finding the intraday liquidity and taking advantage of that. And so I don't want this actually all in my way right now. So I'm gonna bring that back a little bit. Yeah, I don't want to see that too much. And I really don't need to see that either. So let me just do for this interval only. All right, cool. And there we go. Now I feel much better. So I do still recognize it, but and it actually is very helpful now that I put that here, because the levels as far as my sell side for today are way down here, and I don't really like that. Like I said, I'm not looking for anything as far as a sustained move or any like large expansions. To be honest, I'm okay with just looking for and taking advantage of a small run in price. Doesn't have to be anything crazy. And the reason for that is when I first got started on this journey, I used to think that I needed to catch home run moves, and trying to catch home run moves would always get me in trouble because I felt like I needed to be right. And in order to be right about a home run, sometimes you gotta hold on to that. You gotta be patient. And sometimes it takes that home run, a while to get to the stands. And so for me, it's just a matter of understanding a lot more now, having experience from the time, energy, and effort that I've put in, that it really truly doesn't take a home run. It takes consistent base hits. And that's really what I'm trying to get familiar and consistent with doing. It's just getting base hits and then leaving a runner, which can then go and hit that home run like a track star. It's running like a track star. But with that being said, news is coming out in a few minutes. I don't want to talk your ears off, so I'm gonna mute for this part, and then the next time you hear me speak, it will be the sped up version with me just doing a voiceover. So this sped up part is about 80 minutes reduced down to just under 5 minutes. So I don't think there's any notes that were typed in quickly taken away. But of course, please pause the video if you need to be able to just read the notes. And so the markup has been done. There's essentially two levels of sell side underneath this daily inefficiency that S&P is currently inside of. I know eventually later I do mark the midpoint of that range and use that as a reference point. But at 9 o'clock, there was news that hit the marketplace, something to do with jobs, which is still a hot topic right now, given the Fed's agenda to bring inflation back down to 2%. They focus on price stability and employment. And so, again, some of this stuff is remaining on the screen long enough for sure to be read. So I won't really go over too much of what I'm typing out. But you see now that midpoint or that range has been identified. I saw something worth at least taking a paper trade. It was a 2-to-1 risk reward ratio from the entry to the stop. That range was doubled down towards the first objective of sell side, which was the low of that daily inefficiency. And so I was using the M5 as the time frame where I received an entry signal. Considering it's a high risk trade though, just based off the fact that price has already expanded lower overnight, as well as it already rejected off the midnight opening price. And so if something were to cause it to want to run towards buy side, then it would make it a rather low probability, high risk trade. I want to take high probability, low risk trades. So that's more or less why it was just going to be a paper trade type of day. It was pretty close already to the objective. And so the range of opportunity compared to the range of risk just didn't make sense to me. And so initially, that blue line at the bottom was the sell side, but then on the H1 I identified that purple line, and then like I said, that daily range the price had been in, the low end of that essentially became sell side as well. As far as like trades are concerned, there's levels in which a trader looks to take profit or take partials. So that's why the TP, right? So TP can stand for take profit or take partial. But so essentially that first level of sell side, which was the low of the daily inefficiency, would be TP1, and then purple, right, TP2, and then respectively that blue line would be TP3. And so just monitoring also, as you can see on the right side, the dollar which I think this is about as simple as it can get as far as just having the two side by side, understanding where the likely draws are for both, but more or less the dollar is just a short term gauge of the probability of S&P making a move higher or lower. I'm typically anticipating it doing the opposite of what I'm seeing a dollar doing. And so not much really happening since it engaged the sell side, mostly just moving sideways, and that's speaking with the benefit of hindsight. And so again, should be able to read most of the notes. There's not much really to talk about today. Like I said, the very typical, very boring rules being followed, but the goal is consistency. So shout out to the believer, shout out to the homies that inspire me to be better each and every day. I'll catch y'all in the next one. Peace.